IREN Limited is currently trading at $45.75 per share in the early hours of Friday, May 1, 2026, marking an aggressive intraday surge of 6.74%. This move follows a strong finish to the previous session, where the stock closed at $42.86. The immediate reality for IREN is a sharp disconnect from the broader market cautiousness as investors position themselves ahead of the company's Q3 fiscal 2026 earnings report scheduled for next week. While the general expectation has been that IREN would continue to struggle with the thin margins of its legacy operations, the reality hitting the tape light now is a massive shift in institutional sentiment. We are seeing heavy volume concentrated in the $45 to $50 range, suggesting that big money players are no longer treating this as a simple mining play, but as a legitimate AI infrastructure contender. The insight most people are missing is the acceleration of the Sweetwater substation energization, which was targeted for April 2026 and is now becoming a tangible asset in the company's power portfolio. This isn't just about owning land, it is about having the actual power capacity to run high-density GPU clusters that hyperscalers are desperate for. Most investors look at the historical volatility and the massive 52-week range of $5.72 to $76.87 and assume IREN is just another high-beta lottery ticket. They see the 4.3 beta and get nervous, thinking any downturn in the tech sector will wipe out their gains. The common belief is that IREN is tied at the hip to Bitcoin's price action, and while that was true for years, the current reality is a decoupling. Institutional activity suggests that the Microsoft contract, valued at nearly $10 billion, has fundamentally changed how the smart money is valuing these shares. When you look at the Schwab Intelligent portfolios or other sophisticated investing sites, the metrics are starting to favor companies with secured power over those with just software. If you are using a Robinhood app or SoFi Invest to track this, you might just see a green line going up, but the deeper analysis shows that IREN is essentially becoming a landlord for the intelligence age. The tension here is that many retail traders are waiting for a dip that might not come because the floor is being raised by these long-term AI cloud contracts. The recent movement has been nothing short of a roller coaster, with the 50-day moving average currently sitting at $41.65. Breaking above 45 today is a significant technical milestone because it puts the stock well above its 200-day moving average of $47.13 if this momentum holds through the closing bell. We are seeing a high level of implied volatility in the options market, with expectations of a nearly 11% move in either direction over the next few days. For those using Interactive Brokers or the Fidelity trading platform, the bid-ask spreads are tightening as liquidity pours in. This isn't just retail hype. The volume of over 123,000 shares in the very early pre-market hours points toward a coordinated accumulation. Institutional investors are looking past the missed earnings from February and focusing on the target of 140,000 GPUs by the end of the year. This transition from ASICs to GPUs is the core driver of the current price discovery phase. I want to take a quick second here to get your take on this transition. Comment below how many shares of IREN you currently hold or if you are looking to enter a position before the earnings call on May 7th. It is always interesting to see if the community is leaning bullish or bearish on these infrastructure plays. When we look at what IREN actually does, it is important to understand the business model pivot. Originally known as IREN Energy, the company built its reputation on high-efficiency data centers designed for Bitcoin mining. They focused on renewable energy and grid-connected power, which seemed like a niche play until the AI boom made power the most valuable commodity in the world. Their British Columbia sites and the massive Childress facility in Texas are being overhauled to support liquid-cooled deployments. This is a capital-intensive process, and the company has had to leverage convertible notes and GPU financing to stay ahead. The balance sheet shows a debt-to-equity ratio of 1.51, which would be high for a traditional company but is relatively standard for a firm in a massive build-out phase. Their quick ratio of nearly 5 shows they have the liquidity to handle the near-term capex, which is a detail many bears tend to ignore when they talk about the risks of dilution. Past performance shows a company that has been willing to sacrifice short-term profitability for massive scale. In the quarter ended September 2025, revenue skyrocketed over 350% year over year. While they've had some misses since then, the trajectory of their AI cloud annualized run rate revenue is the number that matters. They're targeting over $3 billion in ARR by the end of 2026. If they hit even 80% of that target, the current market cap of around $18 billion starts to look like a bargain compared to other data center stocks. This is where the expectation versus reality dynamic becomes most apparent. The market expects them to execute perfectly on a very complex technical rollout, and any delay in the Sweetwater 1 substation or the GPU delivery could lead to a sharp correction. However, the reality of the Microsoft partnership provides a level of validation that most of their peers simply do not have. Looking at the sector momentum, we see other players like Cipher Digital and Applied Digital also moving higher, but IREN has a higher beta and tends to lead the pack during these rallies. This sector is currently benefiting from a general chip shortage and a massive demand for GPU as a service. If you are doing your own online investing or seeking investment help through platforms like Fidelity Wealth Management, you'll notice that the conversation has shifted toward energy-first companies. IREN fits this perfectly because they own the power connection. In the world of high-performance computing, you can buy all the H100s or B200s you want, but if you don't have the megawatts to plug them in, they're just expensive paperweights. IREN's 3 gigawatt power portfolio is the hidden asset that is finally being priced into the stock today. The future outlook for IREN depends heavily on their ability to manage the operational risks of liquid cooling at scale. This isn't just about moving racks, it's about managing heat and power density that is 10 times higher than traditional mining. The potential catalysts in the coming months include the full energization of the Sweetwater site and the announcement of more hyperscale customers beyond Microsoft. If they can diversify their client base, the risk profile of the stock drops significantly. On the flip side, the biggest risk remains the high cost of revenue and the need for constant capital raises to fund the GPU purchases. Investors using SoFi Active Investing or individual brokerage accounts need to be aware that the stock is prone to sharp pullbacks if the broader tech narrative sours or if interest rates remain high for longer than expected, making their debt more expensive to service. To wrap this up, the current surge to $45.75 is a clear signal that the market is beginning to value IREN as a high-growth AI infrastructure play rather than a legacy crypto miner. The expectations were for a slow and painful transition, but the reality is a company that is aggressively securing multi-billion-dollar contracts and hitting major infrastructure milestones ahead of schedule. We've seen the tension between the skeptics who focus on the volatility and the bulls who see the massive power portfolio. Today, the bulls are winning. Whether you are using Fidelity IRAs for long-term holding or the Robinhood trading platform for short-term swings, understanding the underlying value of their grid connections is key. The disparity between what the average investor sees, a volatile mining stock, and what the deep analysis reveals, a strategic power play, is where the opportunity lies. Keep a close eye on the volume as we approach the earnings date, as that will tell us if this is a sustainable breakout or just a pre-earnings pump. IREN has proven it can scale, but now it has to prove it can turn that scale into consistent, repeatable profit. The market is betting that the Microsoft deal is just the first of many, and if that reality holds, $45 might just be the new floor for this company as it moves into the next phase of its growth. While the road has been bumpy, the direction of travel is becoming increasingly clear for those willing to look at the hard data. Disclaimer, this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.